Welcome back, folks. You are looking at a daily chart of the euro. In this video, I want to go through an analysis of the euro and the dollar index, and I also want to walk you through how we could have traded this move up that we've had just yesterday on FOMC. Okay, so we have reached our downside objective from my last video. I said that once we had this move down on Friday, I said that we would take out these lows. Okay, this was Thursday's lows, which was the low of the previous week. Okay, when we're looking at that, I had a weekly chart up. So we were here, okay, and I was saying that that was going to be the immediate draw on liquidity, and I also mentioned that we would tap into this week. Okay, I was not expecting that we would take that entire week out, although we have, so that's okay. But I did tell the daily chart that we would come into that week. What I was expecting was to come into that week as we have, and body candles would kind of close in around that 107.40, which we've done. But we've also wicked further than what I thought, okay, and actually taken out that low and come into what is a daily order block, and that's where we've had a nice reaction from, and that's fine, okay. Now, I'm still bearish on the euro. I don't believe that the lows are in, and I believe we are headed lower. This is the next draw, okay, under this daily candle. Okay, is the target, in my opinion, which comes in at 106.720. Okay, and if we drop in down to a 4-hourly chart, there is a tiny little gap, and I believe that will be the exact low. Okay, and that comes out 106.642. Might be slightly different on your charts, but under this low, okay, there is a tiny gap on the 4-hour chart. On my chart, that's at 106. The low comes in at around 106.64. Okay. So that's where I believe we are headed. Now, coming back to a daily chart, we are at that level where I mentioned in the last video at 108.40, okay, and we are rejecting from there. That was from the 4-hourly chart, okay. So let me drop into a 4-hourly chart, and that was this level here that I mentioned, okay, around that 108.40. This level here, sorry, up here, these levels here, okay. After taking out those lows, I was expecting a retracement back up to this level, 108.40, okay. So we are now at that level, and I do believe that we are headed lower. I'm not ready to short right now. I think I need to check the news calendar. I think next news is somewhere on a Friday, so I would expect some choppiness, and I would think that we would have a move down either on Friday or early next week. But I'm expecting lower moves on the euro. Okay. Now on the daily chart, that also means that also we have these equal lows here now. Okay. So that's going to be the immediate draw, but I think that we will push lower under this daily bar here. And that's our pump for the dump. Okay, so still expecting lower prices on the euro. Notice how the body candle here is inside of this resistance level. Okay, so as I said, that when you have a move down, there's going to be a pullback, and this down candle, which is the last down candle prior to this swing low, okay, down candle in this swing low that made these highs. Once you break that, then that level there is the resistance. Okay, so we've kind of pushed a little bit through there, and that's okay. The body candles are still within that tolerance. I want to see price remain inside up to the midpoint of that down candle. I don't want to see price. The body candles is what's important. What's going on here? Let me just make sure that's correct. That let me just redraw that. So the midpoint of this candle is what we want to measure. I don't know why that's staying on. So that comes in at that level there. So I'm not worried about the wicks. They're just stop hunts into anyone that may already be short. Okay, but I don't want to see body closures above that midpoint, so we'll keep that on the charts. Okay, so I'm expecting lower prices from where we are into this zone here, 106.72. Okay, let's have a quick look at the dollar index. Okay, dollar index has had a nice pump up. Okay, and I've got the levels marked. I won't talk about these now. I'll do this in a separate video, but we can see we've had nice. These levels I've got on these charts are respected. Okay, so if we're going through, come back down. That's now resistance, push down into this down candle, and we are rejecting. So we have these equal highs. Okay, I think we will tap into that. I think that will be the draw on liquidity. I think this still needs to come down a bit, so we may still get some higher movement on euro. I think this still needs to come down and then get back up. But I think that immediate draw will be these equal highs on the dollar index and this high as well, and that should equate to the level that we have on the euro. So that's those equal lows on euro. And that's that bar there. Okay, so we should be heading down to there on the euros. As I said, because there's a wick here, we may still get some movement, probably some movement up to this 50%, the midpoint of that down candle. We still reach up to there, but I am expecting lower prices on the euro. Okay, now I want to walk through a trade idea on how we could have taken this long, maybe not all the way, up to this level here, okay, as a target. Now, I'm going to drop down to a 4-hourly chart, okay, 4 hours. So what we can see here is you always want to be looking at where does the market take liquidity, okay? So we can see as we're going down, we're taking all this liquidity is being taken, okay? And you want to have your daily order blocks marked on your chart at all times. So if I go back to a daily chart, if we're expecting a move down to this level, which is what I had mentioned in my last video, the next daily order block is this down candle, okay? And it's an order block because this down candle has taken all this liquidity on the left, okay? Order block must take liquidity. Now, this one, if you can look at this, it's taken out the high of that candle, okay? And going down and taking all these lows out. So that's a very strong order block, and we would expect there to be a reaction from that, okay? So you don't know if you're going to get down there, but you want to have these levels marked on your chart. This was another order block as well, okay? But this one in particular is the one that's under our wicks that we were speaking of, okay? So that's the one that I had on my chart. That was the closest one under that particular low, which was our target. Those were the wicks that we were referring to, okay? So on a 4-hourly chart, that was already marked on my chart, okay? And we had taken all this liquidity, which we were expecting. So all those lows were taken, this low was taken as well, okay? And on a 4-hour chart, there is a tiny gap. You might be able to see it right there, okay? Let me see if I can draw a square on there. It's right there. Let me just make this bigger. The other thing you want to have in your chart are these gaps because they often are support or resistance. Okay. So let me draw this. Hard to grab these when they're so small. There we go. So you can see the market has come. Let me make this bigger so it's easy to grab. The market has come into that gap. Okay. And let me just make that a different shape. Okay. So I've just taken that gap and I put a box so we can see that gap on a 4-hourly is above the daily order block. That gap's important. Okay. The order blocks that are surrounded or close to gaps are very powerful. Now, we've tapped into that daily order block, which is that horizontal blue line, and this 4-hourly gap. Okay. Now, once you tap into these, so once you can see that as the market's come down, it hasn't gone into the order block. Okay. And it's gone up and now it's taken liquidity. That's important. Okay. It's now taken liquidity and entered into that bullish order block and this 4-hour gap. That now also is an order block for the future. Okay. But now once you've done that, you want to jump down to a 1-hour time frame and kind of look for your entry. Now I want to show you a couple of things here. The first thing I want you to realize is that that box there is the 4-hour gap, and this dotted dash line is the midpoint of that. I want you to notice that the body candles are closing above the midpoint of that gap. That's important because that tells you that it cannot get below the midpoint of that gap, and so therefore it's a bullish signature. Okay, even if we drop down to a 15-minute chart, let's have a look at that gap. Okay, you can see, notice how the bodies of those candles are respecting the midpoint of that gap. That indicates strength. Okay, the gap is a support, and the fact that it isn't getting below the 50% mark, the midpoint of that gap, is further confirmation that there is strength there. Ignore the wicks because they are tapping into the daily order block, okay, which is that horizontal blue line. Okay, so that kind of just gives you the indication that there is strength there. It doesn't mean you have to enter there's nothing wrong with entering there once you tap into a daily order block, but you may not be comfortable doing that. But on a 1-hour chart, it's very clear what you can see. So let me help you identify what we can see. Okay, on a 1-hour chart, let's just open this up a bit. Okay, so that we can see. So here is that initial move up on that 4-hour chart, which is the manipulation, okay, before coming into the daily order block. Okay, that's important to see because you always want to see a level of manipulation, and then you want to have liquidity for the market to go back up into, right? So ignoring all of this because you may not see that, even these down candles are telling me that we are headed higher. I'll talk about that in a moment, but again, you may not understand what that means. But when you tap into this order block on a 1-hour chart, we've taken all this liquidity, right? This daily order block that I'm referring to, we've got that already marked on the chart. We've already got the 4-hour gap marked on the chart. We can see the midpoint holding. This down candle is 9 a.m., which is New York time. So it's a New York session on Tuesday, okay? And it's basically taken out all that liquidity. That there is an order block, okay? Because it's taken liquidity, it's gone above this high, okay? Just tapped it and then gone below these lows, okay? The order block doesn't have to take out a high. If it does, that's good, but it does need to take out the lows, okay? Now, that becomes your order block. Once you go up through that high, I like to see candles close above that high to validate that as an order block. Then any move back down into that, let's actually put a line there, is a entry for a long, okay? Oops, don't need this one. You can see, once we've gone up above this down candle, once it's taken out liquidity, you have entry. Look at all the opportunities for entries. That is the institutions getting long because they know we are going higher. Okay, even just back up to here is enough, right? But you would get a nice move up. So that's how you've got to trade it, this move. Each one of these moves back down into the order block. So this is coming. This is an Asia session entry. Okay. This here is London session entry, right, at 3 a.m. 3 a.m. London time is the second hour of the London session, and a perfect time to go long if you're bullish to the market. Okay, so I just wanted to highlight that as an entry that you could have had after tapping into the daily order block, seeing that the midpoint of the gap on a 4-hourly chart is holding. Okay, we saw that on a 15-minute chart. We see that on an hourly chart. We also saw that on a 4-hourly chart, and then validating this down candle as an order block for entries. Okay, your stop will be under the low. Okay, so very tight stop. Now your targets, for me, it's going to be back at that this daily level, this daily down candle where the swing low was broken. Okay, so don't care that I don't get the exact high, but I was simply just targeting the open of this down candle. Okay, and that was enough, as an entry up to there. That was enough, 60 pips or so. Getting 80% of that range is enough on a high probability setup, such as one I just walked you through. We're tapping into a daily order block. We're respecting the 4-hour gap. Okay, and then we are forming other higher time frame order blocks on a 1-hour chart that we're tapping into at key times. Okay, we've got an entry in Asia session. We've got an entry at the London 3 a.m. second hour session. Okay, so they were very nice entries. Let me talk a little bit about these down candles. You may not see this all the time, but this essentially, you can see this is consolidation at the highs there. Okay, and here the market makers institutions are setting this up to go higher. Each one of these down candles is the market makers institutions buying into this market. Okay, and then this is the smart money reversal. The immediate target can be simply back up to above this consolidation. Okay, that small move there on this smart money reversal. Okay, where you have the lows taken, immediate engulfment. Whether it's you pick that up on a smaller time frame or get in there and exit there, that in itself is a decent move. Okay, it's not all about the pips, but that there is over 35 pips. Okay, on a 10 lot, that's over $3,000. On a 5 lot, that's $1,500. On a 1 lot, it's a bit over $300. So it all comes down to how you manage your own risk. But we are learning about price action behavior here. So everything in this move down with this consolidation is telling me that there's a potential long setup occurring, and I'm just waiting for this reversal. Okay, and that reversal is occurring at the right time, a 9 a.m. New York session. Okay, on Tuesday, right, on the 11th of June. That reversal is occurring at the right time, at the right price point. It's tapping into a daily order block. Also, it's respecting a gap on a high time frame for hourly. And then we can see the reversal. Okay, so on a smaller time frame, there are entries to get in there. Okay, but it's easy to see on a 1-hour chart that is the order block. It's taken out liquidity. Okay, it's also tapped into the daily order block. It's also respecting the 4-hour gap. Okay, it's validated once price moves above. Okay, we've got price moving above, and then as price is tapping into that order block, that's our potential reversal for the market for price to now reprice higher. Okay, and we're expecting minimum, absolute minimum, is going to be the highs formed prior to that dump, or on a higher time frame, like I said on the dailies, where we break a swing low, that last down candle. Right, we broke. This is a swing that created this high. We broke that swing low. This last down candle should act as resistance. The bodies are closing at that level. So that was my initial target on that long. I don't care about this wick. Right, that to me is just a stop hunt. And we don't know that's going to go through there. Okay, so that's why having sensible targets at that level. Let's actually put a line there so we can see on the daily chart is right there. Okay, so that's a decent move from these entries up to that level there. Okay. Hope the video was insightful. Go back and rewind, watch this section again on how you could have entered this move. And now, as I said, we are looking for lower lows on the euro. It's all about timing now. When do we get in? So watch the market, look at price, look at what the market does in the next few days. Okay, and then I will post another video probably over the weekend. Okay, I'm going to talk with you in a future video.